Jerome Powell from the Fed just made a huge decision. He decided to go down the unemployment mandate and not the inflation one. So how will the market react in the coming weeks and months? In today's video, we break down how similar cutting scenarios in terms of interest rates have led to either recessionary paths or even euphoria, and how we can possibly start to see this in markets. On top of all of that, we've got whales re-entering into the Bitcoin markets with some big sells during low liquidity periods. And it's caused a huge bunch of selling through some key technicals. So let's look at what's ahead in the macro edge here for Pepperstone in the coming weeks. Guys, don't go anywhere. We've got a lot to talk about together right now. Well, welcome back everybody to Pepperstone's Macro Edge. My name's Thomas Atkinson, and in today's video, we'll break down everything that you need to know about the latest macro data, the huge key flows in terms of Wall Street's actions, and of course, the structure of the markets over the next coming months. There's some big stuff to talk about, but let's start off with maybe the bad charts, and then we'll look at the silver linings in terms of the abundance mindset for opportunities out there right now. First off, we've got a chart here from Bloomberg that shows valuations, and of course, you may not be surprised at all to see that they are sky high. Yes, as of August 2025, we have a new high on pretty much all the main ratios, and it shows that we are in a bubble maybe like no other before it. 1929 was the last time we saw valuations this high, and of course, some other classic cases were the 90s and of course 65. So what does this mean? Well, as you guys may be aware, when everybody thinks something's in a bubble, it generally still has more room to go. It's when people get to that euphoric point thinking that they'll be the last ones to get out and they'll get out before everybody else that maybe you need to worry even more. But one of the things that has become very clear is that now we are seeing the rise of exchange traded funds. So, of course, people are using these across the markets, and it's actually now surpassed. More exchange-traded funds exist in the markets than stocks themselves in the US. And I thought that was a pretty big point in time here, because the exponential rise of exchange-traded funds since 2020 has been something worth to watch. So yeah, there's less stocks than actually the funds themselves out there, and it's something, of course, we'll be looking at. Another chart looks a little bit blurry here, but this is from Bank of America, courtesy of bar chart, is that net 91% overvalued, basically economists think that the markets are net 91% overvalued. Now, you might think, well, this means that the markets can't go up anymore. But although this is a really high read, you've got to remember that it's been high for a very, very long time, especially even pre-pandemic back in the 2018, 2017, 19, where we already reached very similar numbers to this. So remember, just because everybody thinks something is overpriced, it's when everybody just starts chasing those unrealistic gains that you start to worry about things. And one of the markets that I often look at is actually the IPOs. So this is, of course, the new public offerings coming on markets. Now, this is a cool chart here from Kaleo Bost over on X, and you can see that we have an average usually in most years of 156 new IPOs. In 2025, it's underneath that number though, at only 108 so far, although I do expect potentially for it to get back to the average. The key read here is actually the best reception. Have a look at this. On average, the first day of returns from an IPO this year has been 34.5%, and that surpasses 2020-21 and even almost the 2000 period. So it puts us in a very unique point here where we're starting to see that euphoria drive into markets. So have we seen more IPOs as in general compared to the S&P? No is the simple answer. You can see here if we go back to 2020-21, as we saw, the euphoria was much higher than when it came to listing. But some things have changed. You've got to remember that a lot of public offerings have stopped happening until companies are actually so large that they could potentially go into the S&P 500. So where does this put us in terms of the current market structure? Well, the good news is that the Zweig Brett Thrust, which is one of the most bullish reads you can ever get on markets, one of my 3 top favorites in terms of Brett Thrust, is actually been kind of going the way you would expect. According to Grant Hawkridge, it is a little bit above what it should be doing, but you'll notice that in general, Zweig Brett Thrusts, we tend to get this huge movement up, and then we start to see a form of rotation. And this is caused because generally what Wall Street will do when it first starts off is they will chase gamma stocks. So effectively, they'll chase stocks where you're looking for that kind of really big growth and you're looking for those big giant technology companies. And then as they kind of reach their peak premiums, we start to see Wall Street move into other things. Now, we mentioned in our last macro edge that we started to see this already happening in the structure, and that becomes very important when we look at some of the ratios later on today's video. But we're also in a week ahead of course, a major holiday. We've got pre-Labor Day week right now into the US, and we know that generally speaking, when you're taking a look at, I guess you would say, holiday periods, the markets can be quite bullish into Labor Day, and then sometimes they'll actually turn out to be a little bit bearish post-Labor Day. There are, of course, notables here that where things happen, but according to Almanac Trader, you'll notice that we do have a Wednesday, Thursday, Friday run, which overall tends to be mostly bullish, with Wednesday being the best session overall. And this is, I think, always important to note. Into holidays in the US, sometimes the market structure will be better. Into, of course, post-holidays, sometimes you get a little bit of that lag. But in today's video, we're really talking about two major concerns. The first one is what the Fed have just said. The Fed have effectively said we're going to focus on unemployment rather than inflation. And it has people wondering, well, are we going to see some form of stagflationary environment? And if the Fed's cutting again, are we going to enter into where the Fed cuts really, really fast? And that notoriously has led into recessions. Well, I guess the good news is it's all about the speed of which these cuts happen. And it's also about the way that the market comes out of these cuts. It's quite well known that after the cut happens itself, that often we get kind of that buy the rumor, sell the fact style market, but that we have two choices after that point. Sometimes the markets go in a recessionary path, and sometimes they go in a pretty bullish run. And generally, we see the structure play out over the first 1 to 3 months. This is actually something we saw back in 2024, and so far it has stood true in terms of the way that the market is cut. And you can see here that the returns so far, according to Carson and Ryan Detrick here, have been pretty much in line with the general expectations over history. So will it be the same again in September if we do get this cut from the Fed? Well, this is the chart to probably watch here. And I posted this one. It's courtesy of Goldman Sachs. And you can see here that we have a market that usually goes up. And of course, you've got a market that goes down in a recession. And it's really what happens in that first little period here that you want to be watching when you're checking out the S&P 500. This is one of the key charts, of course, that everyone needs to look at. But the structure will be really, really important coming out of it. Because if market structure starts to go down after the cuts happen, well, history has not been so kind to those style situations. We don't know that yet, but of course, it's something to look at. Got a Bloomberg chart here as well when it comes to oil, probably one of the least liked commodities this year. Geopolitical tensions, all sorts of things causing some problems in oil. Well, it turns out that bullish oil bets have fallen to 17-year lows. And this comes to a point here where you start to say, well, wait a second, are we going to start to see market structure improve? And we have seen some signs of that already happening in the markets. Some other things happening is, of course, the seasonality of markets here. You can see Nautilus, as we brought up last week, usually sees in post-election years a bit of a up, down, and all around style market into the end of the year. And this could also line up well with the idea that Wall Street may rotate based on the interest rate cuts that are expected from the Fed, and therefore markets going into, I guess you would say, interest rate sensitive stocks, things like value stocks, the Russell 2000, where many companies actually don't make any money and need to refinance. This is, of course, one of the big questions coming up. Now, we mentioned that inflation and, of course, unemployment is one thing, and we know that the Fed is going to be most likely cutting for unemployment. But we also have Bitcoin. A giant whale came in over the weekend and ended up selling 24,000 Bitcoin. That was worth about $2.7 billion. And it caused Bitcoin to actually fall through the 112K support. And that definitely caused some concerns in the markets. A $4,000 crash happened. And this leads into the idea of, has this begun what most people or a lot of people believe is a cyclical bear trap that tends to happen around this period in crypto? Bitcoin often has a somewhere around 20 to 30% decline somewhere near the end of its kind of alt season or, halving run. And during that time, often the other coins, Ethereum, XRP, some of the others, tend to actually do or hold a little bit better. Bitcoin drops. Sometimes it recovers back, which is what it's done in the past. And then we sometimes see what we call the alt season. I'd be interested to know whether you guys think the alt season is coming this year later on. Generally speaking, it happens only for statistically around 30 to 40 days when alt season starts. So if it's going to follow similar to the chart here from Brett Eth, which is the halving cycle, we're at about this point right now. And you can see that in previous history periods, there's sometimes been another run, not necessarily a euphoric run, but another run. And during this period has been the decision where sometimes alts actually start to play through. In terms of this week, earnings watcher chart here, it's all about NVIDIA though. The focus will be on this as the catalyst. This is the main piece of news that most people are looking at now that we've seen what Jerome Powell's doing. And it's expected to be around a 7 to 8% move. So that's basically meaning that we've got a massive move coming here for NVIDIA, and it's going to be in those terms of hundreds of billions of dollars potentially each way. Generally, NVIDIA does beat expectations, but that doesn't necessarily even mean the stock will go up. It's currently trapped between 170 and 200. Well, let's jump into the charts and first off, have a look here at Bitcoin. This is, of course, the big one, and Bitcoin has broken through the 112,000 barrier. Now, as it got through here, it makes you start to think, well, maybe we need some volume profile analysis because, of course, we need to see where the most traded zones have been. And you'll notice that between around this level of 106,000 to 103,000, we've got quite a lot of previous accumulation, which led into a bull run. So the question is this where we start to see some buyers? Is around this area of demand where we see it? Or could it be a liquidity swipe and go underneath 100K? Well, that's the one that most traders will be looking at. And the big key to there is usually have the patience to see the market actually structure up. I usually like to see markets do something like this. And if they do something like that, then that tells me that it's had some thought process around accumulating that particular position. Sometimes the big problem with crypto is that you end up trying to buy the dip. And what does that lead into? Well, it leads into, of course, potential getting kind of ripped out in terms of the falling knife. Because remember, crypto markets can fall quite a lot. And even if we only fall the traditional kind of way of about 20%, that would take us under 100. And that's actually often what has happened in previous periods for the crypto markets. Some other charts of interest this week, of course, is gold and silver. They've both started to improve. A lot of technical analyst traders are looking at things such as this downward trend line kind of breakout, and also the inverse head and shoulders here on the charts. And you can see we've got some strength coming through on the charts here. And the big key level to look at will be somewhere around 34.50, as this is actually part of a much larger big pennant style pattern. And you can see here we've got the lows, we've got the highs, and we've kind of been trapped in between both of those zones. So certainly one that we'll be watching very closely for breakouts either way. But for now, the bulls are in some control. Silver is something similar. We can see here silver's been rallying up in recent weeks and it's been improving. And it has got a new high on it over the last couple of weeks, responding better actually than gold in terms of the initial action. Some other big macro kind of things that have been going on. One of them has been China and the composite. You can see here that Chinese stocks have been on an absolute epic run. And this is driven by central bank liquidity more than anything else. The one thing about China is that often it goes into hyperactive style markets. So is that an aggressive trend? Yes. Is it currently bullish? I guess you would say yes. But the key here is that it is broken through a multi-year high. So clearly there's quite a lot of euphoria starting to appear in this market, but the trend is firmly set to bullish, at least at this stage. I'm sure a lot of traders will be looking for things such as Fibonacci pullbacks, etc., on the horizon for a stock like this, or in this case, the stock index. NVIDIA, as we mentioned, is trapped between two zones. So most people are going to be looking between around 170, which you can see here on the charts, and around 185. So it's basically trapped with a resistance and a support, and it's coiling ahead of its earnings. Remember, earnings does tend to be positive, but it's the reaction that we're looking for in this case. On broad markets, it's really just about one particular type of market, which is rotationary, and it's value, the Russell, and metals that have been of interest to, it looks like, Wall Street over the last couple of weeks. And you can see here that they have started to show signs of the Russell improvement. It's still early days, but best thing we've seen so far for the Russell for a little while. And if you actually take a look at the charts for the Russell, you'll notice that we broke through the previous high over here. And it makes you think that maybe money flow could start to turn up and pullbacks may be bought by buyers into possibly the first major targets. So this is, of course, technical targets, and it is a potential. So make sure to practice your own risk management and everything else. So guys, there's the week in the macro edge in terms of markets so far. The big news this week will be Nvidia earnings. And I always say with these types of things is it's all about the abundance mindset. There's always another opportunity out there. We've seen oil potentially start to show bottoming signs. Maybe we'll focus on that in the next show. We've seen gold and silver start to show improvement. China's been doing its own thing while we've had all of this other information coming through. And, there's always something else out there. So I hope you enjoyed today's show. Give it a like down below. Make sure to subscribe to Pepperstone's channel, and we'll see you in the next one. Bye for now.